Hello, everyone. Good afternoon. Let's get started. So it's my absolute pleasure to welcome you to this session where we'll be talking about building the foundations for sustainable finance in developing countries. And we have an absolutely wonderful panel. I'm delighted to have you all here today. If I start from the far side, we have Alexia Letutur from the Millennium Challenge Organization. We have Mark Napier from FSD Africa. We have Ayan Adam from the Africa Finance Corporation and Zoe Knight from HSBC. And my name is Nicola Ranger. I work for the Centre for Greening Finance and Investment in the UK. So in this session, what we really want to do is sort of really dive into how do we make green financial markets work for developing countries. And we've heard over the past couple of days, in particularly even this morning, about some of the huge things that are happening in financial markets globally in terms of greening finance and financing green. So what we want to talk about here is that actually working for developing countries, and how do we make it work better for developing countries? So how do we build financial markets in developing countries that will allow that finance to flow to really support sustainable and inclusive growth in developing countries? And we really want to hear about what are some key successes that we've seen. You know, what can we learn from our wonderful panelists here about what really works, that we can really push forward for, particularly over the next year in the run-up to the next COP. So I'm going to start with Ayan, actually. Could you tell us a little bit of sort of context on what opportunities and needs do you see for green financial market development, sustainable growth, in particularly in Africa, in your experience?
Okay, thank you so much. And so let me actually start in laying out the context, the African context. So I think today what we have is an infrastructure gap of 2.3 trillion. So I see that both as an opportunity and a challenge. The opportunity is that we could actually transform a huge part of Africa's infrastructure, starting with the power sector, where we have still a deficit of 46%. Africa is a very large market with almost 5 billion of the population. We still have to rebuild those power systems in such a way that they are low carbon. So that's a major gap and an opportunity. Africa actually on the project finance arena in the power sector has some of the lowest default rates in Africa, just next to Middle East. So there is a perception of risk that's not real. Yes, things take time, there are delays, but that is critical. Second is that a huge part of the transport infrastructure in Africa is not built, and our institution has done a lot of work in doing that, actually. We have supported a number of ecosystem-based solutions. For example, we have five to six ports in our portfolio, but they are all ecosystem-based. So there is a mineral that is very important, and then we build the logistical part, and then we build a port. And our Gabon port is the first asset where it has achieved a net zero and is hailed as the model, where we have a sustainable timber, manganese, as well as the port. So the third area is that Africa's economies are very linked to natural resources. And Africa is a huge solution for the world, not just in the electrical mobility, because we have all the minerals that will support stabilizing solar, lithium, nickel, you name it, it's in Africa, as well as a lot of transitional metals in DRC, Tanzania, and some of the key markets. So sustainably mining those is also a huge core of the Africa business plan. Finally is the issue of industrialization. Why is this important? Raw materials are transferred from Africa and then brought back to Africa at 10 times more pricing. So the issue of beneficiation and cutting the transport emissions, we do need to talk about. So, and within the mineral resources, there's a significant amount of land that are carbon sinks. So if you look at the Africa's emission today of 4%, our lungs could actually suck all that up. And actually that 4% is mostly in South Africa, where you have large coal-fired plant, and a little bit in North Africa. The bulk of Africa is close to zero. So the opportunity for us is, and this is why we launched the Infrastructure Climate Resilient Fund, is to support Africa to build better and sustainably, which tracks resilience in infrastructure, but also as a sub point is the low carbon. So we are tracking both in this fund. It's a $500 million fund. We're going to scale it up to $2 billion. We're putting a significant amount of our money. So this is one opportunity. And so I don't want to monopolize this, but we can come back to some of the barriers, and we can discuss that maybe at another point. Thank you.
Thank you. Maybe I'll come to you now, Mark. So, as I mentioned, we've heard so many exciting announcements today. Gfans, 130 trillion mobilized for net zero alignment. Is all of this progress that we're seeing internationally really working for Africa? Could you sort of tell us a little bit about what the landscape is of climate finance for Africa, and what are some of the challenges that you see at the moment?
Thank you. That's a very important question. The short answer, is it working for Africa? The answer has to be no, or at least not yet, call it that. We are very supportive, of course, of all of these pledges that are being made. Of course we are, and we welcome them very warmly. But what we have to focus on is making sure that the money or the pledges turn into real money, and that when the real money starts to flow, it doesn't then get trapped in the various conduits that are being set up, the various funds and other structures that are being set up. It needs to get into the ground. There's no use all that money being stuck in these pipes. That's a very important issue, and I hope that by the time we get to next year's COP, for example, we'll be able to show that we've managed to get some of that money out of those pipes. The landscape is poor for climate finance. So we know from our colleagues at CPI that 3% of global climate finance finds its way to Africa. I think there are definitional complexities. We need to get to the bottom of really understanding what's counted in that and what isn't. But we'll be doing some work with Climate Policy Initiative on that next year. And then as far as green finance policy and regulatory reform is concerned, I think the answer is it's very patchy. Some countries have done quite well at putting in place climate acts and green fiscal policy and regulatory frameworks, but others really are only just starting. Some really good signs, like you would have seen the Central Bank of Kenya, for example, putting out guidelines 2 weeks ago on climate disclosures. That's really good. But others really haven't even begun to start. So it's very patchy. And one of the things that we would like to do with initiatives like the Africa Green Finance Coalition is to help the continent move in lockstep, really, together, so that the whole of the continent can be seen to be sort of a credible recipient of investment from the Gfans type investors.
And can I just follow up? Can you tell us a little bit about the Green Finance Coalition that you mentioned, for those that aren't aware?
Sure. I mean, it's an initiative of all the African countries to come together to learn from each other. Fundamentally, it's a peer learning. It's a technical fix, really. It's a peer learning initiative coupled with a peer review mechanism. And I should say it's an early stage. We're designing it fully now. But I think the idea is that if we can put in place a robust policy and regulatory framework for the whole continent, then I think investors will start to really appreciate Africa for the opportunity that it is. And as Ian says, the opportunities are very real, and the risk perceptions are also a little bit misplaced. But investors do need that regulatory certainty, and this is what I think the Africa Green Finance Coalition can help to bring about.
Thank you. And maybe I can just come back to you, Ian. As a big investor in Africa, can you talk a little bit about, from your perspective, from your investor perspective, what can change to really get money to flow more into investment projects in Africa?
So we're a big supporter of the Africa Green Finance Coalition, because this will support us in streamlining the legal and regulatory framework that we need to ensure that we can compete and attract the big money to come to Africa. Second, I think, some of the work that it will do is also to get the right type of capital into Africa. because when African institutions, and we issue green bonds, they are taken up in the global capital markets. But the issue is that we need different types of capital, because everything has to be built. So today, anyone that had a renewable power plant has probably issued a green bond. But the issue is we need that patient capital to create these projects, because these projects are not readily available. And we at AFC, we are involved from project development up to completion. So when we worked on Cabiolica in Cape Verde, it was not a known, it wasn't a known asset. So we put in equity, we de-risked it, we got the regulation in place, we got the PPA. So we had to do all that. And then now we're selling it to others because it's there, similarly in Djibouti. So I think with the Africa Green Finance Coalition, what we want to do is to support that work. And also within the peer learning groups, that we can see which countries are attracting this capital, and that we can then streamline climate finance. Second is we need also resilient investment. It's not incompatible with financial returns, because a lot of African PPA, once they are done, they are actually robust. The governments are guaranteeing, even if they can't pay it, they borrow more money to pay and to hold this. So this is the reality. We are not in a merchant, PPAs are still very strong in Africa, where there is governments that are backing them. So there is a perception of risk. There is the right capital. We need to build these projects. We need to do the project development so that they are available in the global capital market. But every issuance of African green has been oversubscribed. And this is very important to note. We've issued 2, always oversubscribed, that we can't take the money. So the issue is that now we need that equity from basically business, to build these assets, de-risk them, and then there are people that can take on. And I see Andrew here, so he's big on renewables. CIO is another fund that we work together with. We work together in Djibouti. So the reality here is that there's a lot of equity needed. African institutions of investment grade like ourselves, we can tap the capital market. But we gotta create these deals. We have to de-risk the regulation. We have to create a pure learning mechanism, and this will facilitate significant amount of flow. Thank you.
Thank you so much. I want to fly across from Africa to Asia now, and to you, Zoe. So HSBC is one of the largest banking and financial services companies in the world. So from your perspective, how can we get private finance to flow into the projects that we need?
Thanks, Nicola. And now in our Zoom world, we literally can fly across. And in fact, I was in the China pavilion this morning, so from China to Africa for me. But this is a really tricky problem, right? Because we really need to mobilize capital fast. And that means removing the perceived risk, as we've already pointed out, but it also means creating transparency around what capital's actually being deployed for. And here I think there are a lot of lessons to take away from the growth of the label product market. And okay, so some of the markets, the capital markets might be less mature across the African continent, but what we can take away is we can attribute labelled lending rather than labelled capital origination. So we can do both at the same time, but we can really build from the likes of green product development and not reinvent the wheel. Essentially take the activities that are set out and categorized as green by the likes of the EU or Asia, the Monetary Authority of Singapore, the People's Bank of China, and export that knowledge into the African continent as a whole. That really helps because it makes it more transparent for institutional investors to understand where the capital flows are going. And this is part of the problem, right? An opaqueness around risk, reward, and returns that are compatible with institutional investor mandates. And so there's a lot of learning that we can take away from elsewhere to bring into Africa. I mean, the other point that I would make is the sustainability linked agenda is also very important because We've moved on from just simply talking about the risks and opportunities associated with the Sustainable Development Goals and climate change in particular, to thinking about reshaping the entire economy to be net zero aligned. And when you start thinking about that, it's about all sectors, right? It's about real estate, cement, steel, industrials, chemicals, everything that is going on within the underlying economy needs to be net zero aligned. And we'll talk a little bit later, I think, when we get to Gfans, about why this is such a big topic for banks and why, going forward, it makes transparency of what funds are being used for all the more important. In terms of the enabling environment, clearly national policy incentives do help because they set out a direction of travel for investment to flow, which is why in the context of the climate talks that the nationally determined contributions are so important, right? Because they set out a pathway for investors to say, right, okay, we can look at a particular country and see that we want to build solar there or we want to look at wind there, and we can kind of tap into that direction in a way that makes sense for both the political landscape as well as the investment landscape. So that transparency in policy is equally as important as it is in transparent what capital flows are doing. The last point that I would make is that this risk element really is a crucial one, because until we get past the perception, we're going to be stuck in this loop of capital not flowing where it's needed. So I'm really pleased that the initiatives there are coming through.
Thank you. And just sort of maybe sticking with you, Zoe, and with Asia specifically. So how do you sort of see, HSBC obviously has a massive footprint in Asia. How do you see the situation there at the moment in terms of green finance markets? And can you talk a little bit about what HSBC is doing to help build those markets in Asia?
Yeah. So in particular, I mean, this is part of our overall ambition, but we've got 3 pillars of ambition on net zero. One is around becoming a net zero bank, the second one is around supporting our customers, and the third is around unlocking innovative solutions. In the supporting our customers pillar, we've committed to facilitating 750 billion to $1 trillion over the next 8 years, and that is going to happen across all regions, right? But for Asia in particular, we're building quite a lot of coalitions with monetary authorities, other financial institutes, to really drive this transparency and activity point to categorize finance in particular. But we are supporting sovereigns in terms of green labeled issuance, and we're supporting corporates on the evolution of sustainability-linked ideas, so that, and this is another particularly important one, corporates and governments can demonstrate by finance that they are implementing what they say they will do in the country plan. So whether that's for instance, we've issued sustainability-linked products for a steel manufacturer. We've worked on fertilizer companies in order to sort of be transparent about that decarbonisation pathway there. So there are many ways in which you can really tailor the financial solution to the needs of the industry or the individual client or the government in that particular place. I mean, ASEAN in particular for us, but it's happening globally. Thank you.
I want to come over to you, Alexia. You are Deputy CEO of the Millennium Challenge Corporation. I know you work extensively across many countries, not just Africa, also in Asia and elsewhere. Could you tell us what you're hearing on the ground from governments in terms of what they want?
No, absolutely, and thanks a lot. So I'm an optimist by nature, but I'm going to start with a slightly cynical view and then slowly grow into my optimism. So my cynical view is, during COVID, the number of meetings that you hear about, we're going to build back better. We're going to get finance to flow into countries where finance was not flowing before. And we're going to get to do it, in the green space, in the ESG space, and it's all going to be better. And it's like, okay, well, how does that happen? It was difficult before. We're now in the midst of a major global crisis, and we're going to have all these magical things happen. So that's just my dose of cynicism. The optimism comes in as follows, and it's very much linked to what we're hearing from the countries that we work in directly. First of all, they push back, and hopefully you've heard this here at COP. against the notion that there is this sort of inherent trade-off between climate, what's good for climate, and what's good for development. And the countries themselves are saying, we have no choice. We are the first ones in the front lines, emerging markets, of the impacts of climate. And if we do not build our infrastructure, and we have a lot of infrastructure to build, you heard from Ayan, if we don't build that infrastructure in a way that is climate resilient, we're going to have to build it over and over again, which means we're going to have to finance it over and over again. That's not going to work. If we can't find a way to have our agricultural sectors adapt to the realities of seasons that are changing, seasons that happen later, all the weather events that we know, it's not going to work. So I think that clarity from countries is really important. And then, as Zoe said, I think that when it comes to financial solutions, it cannot be just about innovative financing structures. It really needs to go to laying the foundations for investment to flow. And in my view, key ingredients to that are progressive policy environments, are strong institutional actors, so the capacity of whether it's the utilities, whether it's different ministries, but at all levels of government too, local government as well, depending on the structure of countries, that's critical, and good governance in general. And so MCC, as a US development agency, we provide grants, right? And including very large grants. So it can go up to $700 million over 5 years for one country. On average, about $350 million. And so we try and deploy those grants in a way that creates the foundation. And by working with countries, whether it's countries that are working on energy efficiency, as Ghana was, whether it's countries that are trying to work on off-grid electrification, countries that are trying to figure out the right framework for renewables, we work hand in hand with them to help create the right policy environment, regulatory environment, and the enforcement mechanisms as well, as even workforce development, which we don't talk a lot about. So if you're building a road, and you want that road to be built in a climate resilient way, and you want it to be sustainable, you need to think about who's going to manage that road. What's your road maintenance fund look like? And so investing in all those pieces, I think, will give the comfort then for some of the finance to flow.
Thank you. I just want to come back to this point around particularly the sort of institutional capacity and your work at MCC on helping create those reforms that are necessary at the government level. And can you give us some examples of work that you've done, and how do you actually do that in what can be often a sort of institutionally constrained environment? And what's the role of organizations like MCC versus others working in the space, the World Bank and others?
I mean, so capacity constraints are real, I think, in all of our countries, including in developed countries, to be honest. And people love to talk about capacity building, but I want to speak to what the Prime Minister of Barbados said, leadership. And our experience is that leadership is actually the most fundamental thing. Because if you have that, you have to build the capacity, you have to strengthen skills. That can be done. But if you can identify those reformers, people who have leadership, who are willing to connect with other ministries, other parts of the government to make things happen, the other things are hard, but they will come. If you don't have that leadership, you can do whatever you want. You can send people to all kinds of trainings. It's not going to happen. And so because we're able to give such large grants to the countries that we work with, there is actually a real incentive, right, to sort of make it work. And we often talk about backing countries who dream big in the way that we fund. And so finding the right leaders, saying if you do the right things, we'll be right there with you. By the way, if you don't, and I'm sorry to say this may sound harsh, but the money disappears. And we're willing to walk away. And it's not about, a threat or not, it's just, we'll be there with you to walk as fast as you want to walk, and so our experience is that investment in finding the right partners is critical. In every country that we work in, we have a very light footprint, maybe 1 or 2 people from MCC. The actual work is done by people of the countries. They build sort of a project implementation entity that is governed by the government, the board, the government, the private sector, women's groups, civil society. So it's really their ownership. They own their own work. And I think that's something that we need to talk about more in the development field.
Maybe I'll ask you a little bit more about that then. And particularly, again, we're at COP, we're seeing big announcements happening there's a lot going on sort of public-private initiatives, task force being announced, etc. Earlier today, discussions on the task force for climate finance, access to climate finance. Where do you see real change coming from on this, in the near term, in the next few years?
So change is slow, but change is coming. And if I look at some of the work that's happened, including, for example, at the OECD, where they're putting together the institute to link to back the theme of our panel, they bring together institutional investors and commercial banks and private equity managers all in the same room to say, actually, what are the right policies and what does that look like? What are the barriers in the markets and what can we do to overcome them? I think those spaces that are bringing the different actors together and being really precise about what's needed is really important. I think the work on the NDCs is really important, and I think we're seeing slowly more and more ambitious NDCs, and including in my own country. So I'm proud of that the U.S. Announced its NDC in April as well. So I think those commitments that are real about aligned vision and what it takes to make a difference. I think measurement standards, transparency around standards, is another area where I see a lot of progress. I think ESG, about 10 years ago, it was nice, but it was still niche. I think now it's becoming real. If you look at Citibank, for example, and some of the conversations they're having around their sustainable progress strategy, that's real.
Thank you. And at one point, I'm going to come over to you now, Ayan. And Alexia, you mentioned the point on the importance of climate resilience as well. And I think that's absolutely critical, well, in every country, but particularly for emerging and developing economies. And if I can come to you, Ayan, so I know this is a topic that's close to your heart as well as it is to mine. Can you talk a little bit about what AFC is doing in this area on pushing for climate resilient investment?
Okay. Well, thank you so much. And so I think for us, the climate resilient, we've been building built environment for some time. So the way we think about it is that it adds to the cost upfront. So because some of our projects are building under current climate scenario. So if you change the climate scenario to moderate or high risk, you have a very different set of stressors in terms of level of sea rise, in terms of changes in participation or lack thereof. And they have similar effect on roads and even on physical infrastructure. And then you have a little bit, you got to rethink how you build, because we are in one globe, and it is true, resilience affects everyone, but it's for Africa, it's even more, because we really are not big emitters based on current trajectory of emission. So that means we need to look at projects from design to construction a bit differently. Longer term, and we do need some blended structures to mine this and to do this in a very effective way. But longer term, and even in our climate models, we will be able to show that if you build right from the beginning, one, it stays longer because it's infrastructure. Second, you're not burdening the new generation, and the overall IRR is better from an adapt scenario vis-a-vis no adapt scenario. But because we're the first one that are doing this, we need to convince even our sponsors, the private sector sponsors. Many times we take majority stakes in our projects. So I think selling it to institutional investors today, we still need to work with these types of network that we just launched yesterday to figure out a way to streamline that. The reason why we do like the network that FSD is doing is that it builds on existing network of focal points at the country level. So you're not reinventing the wheel. And so we are very supportive of that, because that streamlines the knowledge. Whatever we share there will be available to all the countries. So this is also very important. So while our first fund is a marker fund, we are hoping in the future we will prove that a resilient infrastructure is actually better. And we are speaking to a lot of insurance companies. This is very important, because if you look at the task force on financial disclosures, soon a lot of these infrastructure that are riskier may not be insurable if the central banks wake up to the fact that there will be significant amount of risk. So I don't know if Mark wants to add, but so this is why it's important. It's going to affect capital markets, capital allocation, and we do need to think about that and to streamline that across the continent. Only 8 or 10 countries are not on the coastlines in Africa. Every country is on a coastline, even the smaller ones.
Mark, would you like to add on that?
No, it's a really important point. I mean, we're doing quite a lot of work around with Lagos. Actually, we signed an MOU with Lagos State just the other day to help them with their green bond. And flooding is a major issue, and it's Africa's largest subnational economy, and yet it's constantly hampered by floods. So we need a very comprehensive approach there. And I think one of the things that's really missing here, and I think this is part of the kind of baking into the resilience investment narrative, is much better data on where investment needs to get deployed first in order then to achieve the biggest impact on resilience. And we lack those kind of tools. We just don't have the ability to prioritize those kinds of decisions. And so I think there's a lot of work that organizations like ours can do to build that information sort of soft architecture and to help people manage all of that stuff as well.
Thank you. So I want to spend our last 12 minutes talking about how the sort of look forward to COP27, which will be in Africa, as we all know, and what needs to happen. So I'm going to come to you first, Mark, to talk about your vision for that. What would a big push look like between now and COP27 to really make progress?
Well, thank you. Well, I mean, I'm not going to sort of hog the radio waves with Africa Green Finance Coalition, but I would like to imagine that countries and funders will come enthusiastically behind that, and we can launch that in Egypt in a year's time. What I would really like to see is when African countries go to the debt markets, go to the Eurobond markets, they go with a green bond proposition. That's really what I would love to see. So we've had a steady stream of countries going to the bond markets this year. Debt sustainability is a big issue for Africa, we know, but at least if we can make the majority of those issuances green, then there's more transparency behind that. And so what I would really like to see is that the majority of the issuances that are made next year are in fact green bonds, not sovereigns. And the second thing I'd really like to see is, and it's back to the point about capacity, is that we get away from just thinking that climate finance is just something that one person can do in a finance ministry somewhere. It's a huge topic. When you get into all these issues around green fiscal policy reform, it is, as Zoe was saying, it cuts across the whole of the economy. So we have to be very strategic as finance ministries and put in place genuine, deep capacity to be able to cause those kind of reforms to take place. Yes, it certainly requires leadership from the president, but it cannot be just the domain of one single champion. There has to be a proper team involved.
I want to ask you a little bit about the sort of link between what you've discussed is happening in Africa and the sort of international space. And do you see African organizations involved enough, to your mind, in these international discussions about standards, new regulatory frameworks, TCFD, etc., Gfans, which we'll come to in a moment? How do you see enough happening there? And how do you think? What's your vision for that?
Yeah, if I'm honest with you, I think Africa is a little bit remote from these processes, and I think there's more effort needed on both sides, I would say. I think Africa needs to make more of an effort to get involved with Gfans type institutions to learn from those guys. But I think also, I think it would be great if the Gfans organizations could also reach out to Africa. I think there's a lot that Africa could benefit from, and vice versa, I would say. So it would be great to see the formalization, if you like, of sort of, I don't know, Africa chapters of Gfans or something like that, because there are too few African institutions involved there. We're actually just starting some work on TNFD, actually, as FSD Africa, and that's really exciting because that's at the very early stage of the TNFD process. And so we're really excited to be working with DEFRA here in the UK on that. We feel that that's an important moment, really, for Africa to start to get involved in those emerging discussions as well. So more to be done, definitely.
And a massive opportunity for Africa.
Being a continent that's so rich in natural capital. And I do think it's going to be one of the big themes in Egypt, is going to be nature and natural and biodiversity, yeah.
And maybe given the mention of Gfans, I'll come to you then Zoe, as HSBC has played such a big role. How do you see that getting Africa and Asian across developing countries more involved in organisations like Gfans?
Yeah, I mean, at the end of the day, it's critical that everybody's involved. So we absolutely have to do everything that we can to bring people in, as well as doing more outreach. You know, I think if you think where Gfans has come, it was launched in April, and whilst asset managers and asset owners have got a reasonably long heritage in thinking about ESG, banks don't. And the fact that the Net Zero Banking Alliance was formed is actually a real step change in terms of thinking about aligning finance to net zero goals and doing it as quickly as possible. I mean, so Gfans has 130 trillion behind it. It's now operating in 45 countries, 450 firms. And importantly, you know, this links the point of earlier of around national emphasis and financial alignment. And one of the things that I wanted to pick up on, which Alexia mentioned, is around this leadership point, in that we won't manage to transform the economy if we don't have leadership. And Gfans provides that architecture to shift the financial system in an efficient way, because it brings together a coalition of interested and sort of leadership organisations that want to work this challenge through. And by working the challenge through, I mean allocating capital effectively to it be embedded for future warmer temperatures and resilience, so create the adaptation movement, as well as address the mitigation side for reducing emissions. I mean, the other thing on this is the role of central banks, in the sense that central banks have really shifted the dial in stress testing and scenario thinking, and they set out a roadmap to do that. And so bringing Africa into that conversation, I think, is going to be really helpful. And I suspect that Gfans will want to promote regional chapters, and Egypt, of course, and others will be part of that conversation. So I think it's a really exciting year to be part of this finance discussion.
Thank you. And maybe, Alexia, I can come to you now. So in the year running up to COP27, what would you like to see, and particularly in terms of the collaborations that we could see between the international financial community, developing and emerging economies, policy makers, financial institutions? What's your vision for the year to COP27?
All right. So a couple of quick thoughts. Let me maybe start with finance, where Zoe left off. And I think that truly understanding what drives risk-adjusted returns and being very clear about that in relation to climate, I think, is an area that I hope we focus on more between now and the next COP. Same thing in the economics field. So MCC is a very sort of data-driven, evidence-based agency, and we actually realize that our economic tools have not kept up with the reality of understanding our world. And so thinking, when we do our cost-benefit analysis and we, sort of book all the costs, but how do we think about the benefits, right? And how do we think about the benefits over the long term? What discounting rates do we use? That sounds very techie and jargony, but actually if you don't get that right, you're not going to be making the right investment decisions, right? So I think having the economics field truly integrate what we've learned about our changing world and the risks and opportunities in it is another one. I think accountability is another piece that is really important to me, accountability and transparency. And that's at all levels, including starting with donor countries and being very clear that commitments are landing. And if they're not, why are they not? And then accountability also at the country level in terms of those reforms that we were talking about, and are they being made or not, and why? And then that goes right to the financial institutions and different players in terms of their commitments increasingly around low carbon transition, and are they really making that transition or not, or is it talk? So I think that accountability at all levels, and all levels being equal to each other in terms of how much we hold each other to account, is something else I hope to see.
I think maybe I could just dig on that, because it sounds huge, and I know the challenge is huge. But for MCC, what have you learned, I guess, from other country or other regions that we could bring in? Are there a couple of steps to get us started?
Yeah, so we've started. So in April, we developed a new climate strategy, and we said that over 50% of our programs will have to be in climate-related activities. Defined, not just loosey-goosey. And for that, we actually are looking at all of our business processes internally from our economic work. So how do we do constraints analysis? How do we do cost-benefit analysis? How do we calculate economic rates of return? So we're retooling all of this with our internal economists, but also working with outside experts is one step. The second is a fuller commitment on the policy side to really back countries' NDCs, so that what we do needs to be really aligned with countries' NDCs and fully helping them deliver on those. And then we said, for us, climate is not this little bucket in its corner. It's everything that we do. We need to sort of really integrate climate understanding considerations in all the sectors that we work in, from water to energy to agriculture. It needs to be actually integral to everything that we do. So these are some of the commitments that we've made to ourselves and hold us to account.
Thank you. And so we're into our last couple of minutes, but Ian, I want to come to you for a final word. What do you hope Africa will get out of COP26 in the area of green finance, and what's the vision for you towards COP27?
Yeah, so let me start with, I hope to close my fund by then. That's first, and that's the first African Climate Resilient Fund. It's 500 million. I think we are almost halfway there, so that's number one. We are working with FSD, so that launch and that streamlining of the capacity building regulatory support is absolutely critical. Second, I really want to see the big announcements translate into projects for Africa, both on the energy side as well as the land. We have the second largest lung in the world, and it has over 500 whatever gigatons of CO2 capacity. So you will see a lot of this action in this area. Finally, and even also importantly, I think you do have now strong institutions that are in Africa. AFC is a A+ rated institution. So I would like to also see more money coming into African-led African institution. Finally, I think we need to relook at the taxonomy, because for Africa, it's not about just transition. We have to talk about the just transition, resilient building, and also integrate a nomenclature that supports development and better building of Africa, because Africa is more futuristic. We have all the infrastructure to be built, but are we doing it resiliently and in a low carbon way? That's the story. So the notion of transition is not as applicable, and a lot of the taxonomy that goes with that. So just want to end there.
Well, thank you so much. So I think it just falls to me to wrap up. This has been an absolutely brilliant discussion, so thank you so much for this. Thank you, Alexia, Mark, Ian, and Zoe. Absolutely brilliant comments. I think it's been really inspiring to hear about the huge opportunity, and actually there are many things that we can do in the next year to make the announcements at this COP really work for Africa and Asia and other developing countries around the world. So thank you so much for that.